Hi, everybody. It's Jessica Stone at Stansberry Research, and I'm joined now by Garrett Goggin of Silver Stock Analyst. And Garrett, you have a specialty not only of 10 years of investing in silver miners, but you want people to think about not just silver coins, silver bullion, but silver miners. And talk first of all, what's the attraction to a miner as opposed to those other kinds of ways of investing in silver?
They offer leverage on the underlying price of silver that you don't get with coins and bars and that sort of stuff.
The explosion in silver prices has been incredible, and I would think you think we're just beginning the bull run at this point.
Yeah, I've done a lot of research on it. We think we're in a comparable period to 2008. In 2008, the economy blew up. They added about $1 trillion of stimulus, and it took silver about 3 years to get back to that $20 level. But once it reached that $20 level in 2011, it exploded higher to $50 an ounce. This year, 2020, the market already blew up. They've thrown in $3 trillion of stimulus, and more coming. We don't even know what it is. 2 trillion, 3. What's another $1 trillion? So it could be up to $5-6 trillion. And you know what? Things are moving faster and more quickly
Yeah.
than they did in 2008 because the market's already rocketed back in 3 months, and silver's already risen from 12.50 back in March to about $26-27 right here. Things are moving fast, so we think it's going to be a great period for precious metal and silver prices.
So back to our conversation about how to choose a silver miner. What distinguishes a good one versus a bad one?
Yeah, number one, it's management. I've been covering the sector for 10 years. All the mining companies, the vast majority are based in Vancouver and Toronto. It's a very close-knit community. I know these guys. There's relatives that work at different firms, and they work for different mining companies. And I know I'm able to discern between the good ones and bad ones. Now, when I say bad ones, there are companies out there that don't care about the share price. They don't care whether it goes up or down, and they constantly issue shares and the share price goes down, but they don't care because they're making more, salaries are making more through bonuses, they're making more, all the other ways, and they don't care what the share price does. We stay away from miners like that. There's one silver mining company whose share price was $250 about 15 years ago, and it went down to $3 a share. And this is one of the leading silver companies that people quote. And the reason why that happened is because the shares outstanding went up, thousands and thousands of percent. And you got to stay away from these companies because they don't offer accretive growth. And, one of the ironic things that's happening right now is due to the very high price of silver, the worst, most highly leveraged companies are going through the roof. But what these bad miners do, they're going to issue shares. They're going to do more dilution right now, right at the top, and dilute your shareholder value.
So what should an investor look at in terms of, if they do look at documents, financial reports, media reports, what are some red flags?
Well, as far as red flags, I'd take a look at a chart of shares outstanding. If you see those shares outstanding continuously increase, it's probably not a good store of value. One of the main things that we look at is grade for the deposit. Grades drive everything. When you mine silver and you mine gold, you mine tons of earth. That cost doesn't change. It's relatively stable. But you'd rather have 10 gold coins in that ton of earth than one gold coin. It's more profitable, and that's tied to grade. Now, as you mine and you have high grade, then amount you produce is going to increase. So on a per ounce level, that's the denominator in the equation. Your costs go down. These miners are more profitable. They're able to handle the swings better. Obviously we're seeing an upswing right now, but we've got downswings in the silver price. And one of the things regarding the silver sector is silver is produced with other byproducts such as lead and zinc and actually gold and copper. And every silver miner reports their production differently in the way that makes them look best. And it's not accurate because a lot of companies will take these lead and silver byproducts, they'll apply it to their costs, and it'll make their costs look artificially low. What we do at Silver Stock Analyst is we look at 30 companies, we go through all the financial reports, and we calculate our own all-in sustaining costs to find out which miners are actually profitable and which miners aren't. Because on the surface, some of these miners might appear profitable, but they're not. And what happens when you're not profitable is you got to plug the gap. And the way you do that is by selling more shares, which dilutes shareholder value, and it becomes a horrible investment. You got to find the companies that are making cash.
Thanks to you, Garrett Goggin. And if you want to be connected to his analysis directly, just hover on the screen now. We'll connect you to a subscribe link to Silver Stock Analyst. You can also subscribe to our YouTube channel. Please also find us on Facebook, Instagram, LinkedIn, and Twitter. That's all for now. Thanks for watching.